Good evening, everybody. This is John Seville, and this is your executive summary for stock setups for Tuesday. All right, well, today we had some incredible action. Of course, the S&P 500 opening and just having basically at its highs and just completely trading straight down from there. Of course, 2100 was the high on the S&P 500, which was the level we had talked about last week, with the S&P having possibly a bullish rally up into that 2090, 2100 level. So we've basically done that. But we've also closed all the way back down here in the middle of the bottom half of the range. So does that mean that we are looking to fill that gap to the upside or to the downside? Well, of course, with open range being hit on Friday with a high of 2078.19 and a low of 2062.84, we've certainly met the requirements of closing 3 points higher than that in today's market. But with such huge volatility fueled by the vote in Europe, could the fundamentals trump the technicals? Of course, we have a basically 7, 8, 9 days left of action before the next open range. So will we see this open range hold in terms of this upward movement, or could we see whipsawing back to the downside as well? It's going to be a very interesting week, of course, with the vote being on Thursday. So that's going to be very, very interesting. In terms of looking at the overseas markets at the moment, the S&P futures are currently up another 7 points. So it's early to say yet, but it could be another bullish day tomorrow. And there is certainly a lot of opportunity in either direction. If we have a look at the high yield bonds, you can see they kind of gapped up and then kind of closed into closed at the bottom half of the range as well, hitting onto the double top from this, the tops from this candle, and of course over here as well. So we're getting a lot of cross streams all across the board. So it's a very, very volatile week and hard to call. So I would just caution people that this is a difficult market this week ahead. We're getting a lot of cross sections. Again, we have this. You can see these two different systems of support and resistance. We've got this kind of head and shoulders that didn't end up breaking down, but you can see that level has came across also as support, and we shot up into this resistance there. On the other hand, we've also got this level connecting this bottom and this bottom, and then on the top side we've got the potential larger head and shoulder here, left shoulder, head, and then coming down here, which it peaked on today. So again, there's a lot of different cross trends going on in the market, which is why it's going to be, if you're a day trader, potentially very, very interesting. If you're a swing trader, again, lots of opportunities there as well. So just pop that in. There's the upward channel also that we talked about. Yet another potential resistance system. Okay, so in terms of looking at where the potential trades are, I mean, I have mixed feelings on the direction over the next 2 days. I think it's going to be a lot of volatility. So in terms of reviewing some of the stocks that in the summary, I thought existing positions, I thought BG was worth mentioning. Bunge hadn't quite yet hit its entry criteria as a short, but I think that's probably good to go from where it is currently. Of course, that's one of the existing alerts as a short candidate down to this target around $57. So I think that one is good to go now as a short criteria. The details of that, of course, are in the nightly newsletter in terms of the entries and criterias. And UNP, which I think is looking perfect as well, which was an entry criteria at 87.50, and so this one looks really good. The stop criteria is at $90.33, and again we looked at the August $87.50 puts, which were $3.43 when we alerted you to them. Okay, so in terms of new positions, I'm going to give you a couple of longs and shorts as hedges. So the first one is a long, is a flag formation. And this one had a nice big shot up. It's currently consolidating, as you can see, in this kind of flag type of scenario. So measuring the flag from the area it broke out from, being 1460, that gives us a flag measurement of about that much, which is an extension, therefore, up to the just under the $18 price. So depending on where it breaks out from, but let's say it's around the $16 mark, we're looking for a rally from. I'm looking for a breakout of 1606 with a target of 1783 and a stop criteria of 1547. And we can have a look. You can see that big shot up in the money flow. So I really like that one as a flag play for the bullish positions. ONDK, also a bullish position. You can see it's a possible fallen angel. That's Oscar November Delta Kilo. You can see it's written on the screen here as well. And for this one, I'd be looking for a pullback to the moving average. You can see the 9 days at 513, and the 5 days at 519, and a 20-day is at 506. So we've got a few different moving averages below it. So I'd be waiting. I'd be wanting a pullback to those moving averages around 527 as an entry criteria. So a pullback to 527, and then a rally back up to 577 as the target, giving us about 50 cents of reward. And the stop criteria I'd look at would be at 503, which would mean we basically have a 24-cent risk for a 50-cent reward. So we've got a 2-to-1 risk-reward ratio on that potential fallen angel play, with good money flow moving up and underneath the stock. So we've got a flag, a fallen angel, and here's an oscillation trade potential. You can see this is a completely different trade where the stock has rallied, has dropped all the way down, hit this level of support and went straight up. You can see it was kind of looked like it was underneath the moving averages before, and then shot straight up. And this level's only been tested once. So this is why I thought it was worth a shot. These are lower probability trades, but really good risk reward. And so with this one, I'd be looking at this as a potential entry criteria at 533. Okay, with a, excuse me, let me just check this on. No, it's actually better than that. Sorry, 1 second. There we go. So we're looking at this kind of entry zone. So an entry criteria of 527, similar to ONDK, with a target of 573 and a stop criteria at 511, which is underneath the low of this candle of 514. So we basically got about 16 cents of potential reward for almost 50 cents of potential profit. So I'd say 45 cents. So we've got there's three potential kind of longs of different varieties that we could be looking at as a possible trade. Okay, in terms of the short potentials, we've got a lot of shorts. I don't want to add too many to the list. I'd look at IT. IT's got had some really big insider selling. It's also just kind of had a very, very big run from $79 all the way up to 103. And so this didn't have any kind of real rally in today's markets. So I'd be waiting for a breakdown below this level here. We can see the high here about 98.44. So I'd be looking for a break below 98.43 as an entry. Okay, and depending on when that happens, we'd have a look at where that stop loss would be. But currently, I put it just above this, the high of this candle, which is 101.51. So look at 101.73. And this could be a nice long-term drop. Obviously, we're going to get some support here as it hits this moving average, but I'd be looking at the Fibonacci retracement zones. What is it doing here? There we go. So you can see we've got some levels here to have a look at. A 61.8% Fibonacci. I'd be looking just above the 50. So as a first target, which would be just around there at 91.36 as a first target. Okay. Now, and for that, you could also, of course, look at the look at puts, and I would be looking, for example, at the $95 September puts, which are currently $2.35. Okay, so that would be how I'd be looking at that one. Or you could look at the $100 puts at 5.55, also September. And the other potential short is in the healthcare, ARIA. This is a breakdown potential. As you can see, we've had oh, there we go. If we get this one's kind of had a very, very sharp drop in its money flow. And let's just have a quick look at these other levels there. So, yeah, we've kind of got support here and support here. We've got a bit of a range of support. So this may be a little bit early. We may want to wait for it to break through this level, but I'd certainly be keeping it on your watch list tomorrow, because if we break down below 720, then we'll wait to see what happens, but it could then retest up to the moving average and then break down from there. But this is having a very sharp drop. So this will certainly be one on my watch list tomorrow. And if I do take this trade, I'll see if I can get out an intraday alert to you. In terms of, for those of you who like to day trade, of course, we had a huge win on NVCN on Friday. It was up 49% from our alert on Thursday night. Then went another big run today. If you were watching that today, you could have caught that in that zone from here around 88 cents up to the high hit of $1.28. I wasn't in that one myself. I was certainly in on the one on Friday. Beautiful entry and exit. I'll be watching this tomorrow to see if it respects this support right here at 88 cents. And if it gets back above that 88-cent mark, then I'll look at taking another run at that trade as a day trade to the long direction, and looking at see if we can get up to about that $1.05 mark. But that's something we have to analyze during the day. But that's my day trade watch. And the other one on my day trade watch that had some great activity today was FATE. And this had some significant movement intraday, and so this is also on my watch list for possible long above this support level here at 190. Of course, it's already at $2, so it may not break lower than that. But let's have a look at the 5-minute chart, or even 15-minute chart. So you can see it's basically came straight down. It's hit its oscillating support, and so I'd be watching that to see if we can get, again, looking at kind of anywhere in this zone down the bottom. We're going to have to wait to see what the market does in the morning, but this could be a nice little trade from that 180 to $2 range, depending on where it opens in the morning, and I'd be looking to trade that up to about that 210 mark as an intraday trade. So obviously really wanting to get it kind of closer down to that 190 area, have a stop loss below the low of this candle of 183, so it gives us about a 7-cent risk and the potential of a 20-cent reward. So about 3-to-1 risk reward ratio there, and that's how I'd be looking to play that. But again, both of those are day trades, so you're going to have to look at those as day trades in the morning. But that just gives you a nice span of 3 potential longs, 2 potential shorts, and 2 potential day trades. Something for everybody. So with that, happy trading, and we'll see you all in Trading Room. Take care.